impact EBITDA margins because we will do a lot of development in-house trials before we launch these products. Once we launch the cover glass, of course, there will be extensive trials that are done across various stages. Now they cost money which impact the P&L statement. So EBITDA margin, my guidance remains at 25%, considering all these factors.
Thank you, sir. That's what I said.
Thank you.
Thank you very much. The next question is from the line of Yash from Stallion Asset. Please go ahead.
Hi, thank you for the opportunity, and sir, congratulations once again for a great quarter. I just want to understand on your passenger vehicle business, the industry has grown by about 6%, but you've grown by 90% on a consolidated basis. So what is driving this growth? And I'm just trying to understand how you're able to outperform the industry by this margin.
So basically, this is in a large part contributed by the Waterpack acquisition that we did. So that is primarily four-wheeler business. And that has contributed to that large growth in the four-wheeler segment. But on the standalone basis also, we have done some very good businesses in the PV segment. So SJS grew by close to about 40% with new business wins from our customers, new generation products. For example, Tata now has introduced a secret to lit steering wheel logo on their vehicles. So this is the first that they will introduce for the industry, which SJS launched. So that has contributed to our sales. Plus, Exotec has commenced mass production for companies for their customers. So Mahindra new models, their Black Edition, their XUV 3XO. So all of these. So very strong wins in our passenger vehicle market, and that's what I've been guiding. That now that our product portfolio for four-wheelers is very robust and very high-value products. So the future growth of the company, four-wheeler market will play an important role in our growth. And even for the export markets, so four-wheeler is the dominant market outside India, and our forays in the export businesses also will help grow our four-wheeler revenues even further.
Right. And so, just sort of a best case estimate, how do you think the industry will grow this year if I just combine a two-wheeler passenger vehicle and all the other segments? Do you think industry can grow by 20-50% in volumes this year?
No, so you guys are better placed than me because you track all these companies. But the view that we have from our customers is that passenger vehicles, there was an issue of inventory lying at dealer points close to about 55 days in the last quarter, which I believe is being rationalized now. Then we have the festive season coming, which should boost sales. There are good rains, so that should improve demand in the rural sector. So one would imagine that the industry would keep pace. My bet would be that two-wheeler, which has grown about 19%, could be, our estimates are a little lower in terms of growth of the two-wheeler market. But four-wheeler should catch up because they are at a low, thanks to the new launches. So we will wait and watch and see. But as I said, our strategy as a company is no matter which segment grows or not, we are diversified in the products that we address to the markets, and for us, the four-wheeler growth is primarily on account of premiumization and new product launches, and that is driving growth. While we are of course pegged to the industry growth, let's say, but we outperform the industry growth in a significant manner because of this new generation products that we are doing.
Right. And the last question is that.
Sorry to interrupt, sir. May we request that you return to the question queue for follow-up questions, as there are several participants waiting for their turn.
Sure.
Thank you very much. The next question is from the line of Rakesh Jain from Axis Asset Management Company. Please go ahead.
Hi, sir. Am I audible?
Yes, sir, you're audible.
Congratulations to the team for a good set of numbers. Sir, my question is
Rakesh, you need to be a little bit louder.
Sure.
The current participant seems to have been disconnected. May we move on to the next question, sir?
Yeah, please.
Thank you very much. The next question is from the line of Pradyumna Chaudhary from JM Financial. Please go ahead.
Yeah, hi sir. Congratulations on a great set of numbers. So I've got 3 questions. First is a follow-up to a previous participant's question. So in the two-wheelers, we seem to have lagged the industry growth. And you mentioned that that's largely to do with certain models being ramped down. But given that some of our key customers in two-wheeler have reported very good Q1 growth, so is that the only reason, or is there somewhat maybe in some of the models we've lost some business? That's question 1. Question 2 is we recently got to see some of the planned EV model launches for one of our major passenger vehicle clients. So one thing I noticed was they don't have metallic logos for their EV portfolio. Rather, they have plastic or glass logos which get lightened up. So are we supplying such parts to them? And if not, do we see a risk to certain part of revenue if more and more models start coming in this new kind of logo? And third is a more generic industry level question in terms of production schedules that's being shared by the OEMs. How are you seeing the demand? Because July particularly seems to have been quite weak across the industry. So these 3.
Okay, so let me take them one by one. So your first question was two-wheeler growth, whether there is something that needs to be, I mean, that I've already answered that question earlier from a participant. So we continue to win large businesses. We have not lost a business in two-wheelers, so everything is as per plan. Now we don't supply to all the models. So while the companies do report growth, for example, I don't supply to Hero MotoCorp, but I supply to some customers. Now, depending on within the specific customer, I would not like to call out separate customers, but some models have not done so well in terms of demand in this quarter. In some models, there is a change that they are launching a new model. So we have businesses that are awarded to us, and these will come into production maybe this month or next month. So it's purely a product mix issue, nothing to do specifically with the industry or our trend, which I say that whatever the two-wheeler organic growth is, we hope to be by and large in line with that for a two-wheeler. The second question you had was on EVs, where you see that in some vehicles you've seen that the content is a little different from the IC engine. So I repeat what I've been saying earlier. So when the competition intensity increases, which is low at the moment in the electric two-wheelers, it will increase. So the need for differentiation will be dominant. So, the aesthetic appeal of a product is the key factor for a person buying a vehicle today. Performance is by and large given in terms of what is the range of the battery, what is the performance overall, the ride quality of the bike. So most of these are pretty sorted. So I would imagine that this would normalize and you would have more and more new generation requirements of increased aesthetics in these companies, and that we will see once the volumes increase. So at the moment we already supply to Ola, we supply to Ather. What I said earlier in my calls is that there's a transition that's happening from the conventional speedometer that you had in a two-wheeler to an electric digital cluster. We are already working with Foxconn to supply that to a very major two-wheeler EV manufacturer. So we are ready with the technologies, and depending on the model that they launch and what is the configuration that the stylist has for that particular model, that defines the content really. But in the long term, I think the value increase on account of the digital cluster that you will have will compensate for something else that you see is different from the IC engine. But always there will be logos and the need for differentiation. So I hope I've answered all your questions. There was a third point which I have forgotten, honestly.
The third was regarding the production schedules you're seeing from OEMs, given July was particularly weak across industry segments.
You're talking primarily with respect to two-wheelers?
No, across industry segments, two-wheelers and four-wheelers, as well as consumer goods.
So two-wheeler is okay. So we see strong demand and strong order outlook. Four-wheelers is still picking up. So they are hoping that with these new model launches and the festive season, things should improve. So many customers which reported a little subdued number for this first quarter still maintain that they will catch up the volumes that they're planning from September onwards. So that's the outlook broadly.
Understood. Thank you.
Thank you.
Thank you very much. The next question is from the line of Rakesh Jain from Axis Asset Management Company. Please go ahead.
Yeah, thanks again for the opportunity. Sorry, my line got disconnected. So my question was, could you help us remind what are the priorities now, given that you are doing a lot of stuff and there's a lot of inorganic additions which we have done, and can you just help us prioritize? What are the areas which are more from near term, and what are some medium to long term opportunities which we have in the kitty? I mean, the new customer addition or the new content. Where are you focusing more on the near term and more on the longer term? And I'll take up the second question after that.
Okay, so in the short and the medium term, we see a very strong demand for our products. So capacity expansion at Exotec is on the anvil. We want to grow this very quickly, and the plans are finalized or on final stages of finalization. So expanding capacity at Exotec and Waterpack, that's one agenda or one focus area. The second really is to get the cover glass business started. We have a good engagement with the customers, so getting the business and setting up a new plant for cover glass is on the anvil. So that is again something that we will do over the next 1 to 2 years, and we will start supplies in a phased manner. The third thing in terms of the market really is that we have now a very strong product portfolio, and we are knocking hard on the doors of these global OEMs to crack large global businesses. So that is the third focus area that I have. And as I said, we are very competitive. We benchmark ourselves globally. We have a strong customer connect. We have an impeccable delivery rating, and they respect us for our quality. So we tick all the boxes in terms of the global businesses. Now that we have COVID behind us and then the semiconductor chip shortage behind us, the buyers at these global companies are now looking at launching new models. There were some supply chain constraints that they faced because of some shipping embargoes and some unrest that you see. So the war still continues, but I think it's more getting back to normal. So we are very focused on driving export growth, and that's an area where I think we are making good progress, and hopefully we'll give you some good news in the next quarter.
Great. The second question is, how should we look at your business mix? I'm not saying over the 1 year, it's the next 3 years, with consumer durables addition of this large client and the opportunities you are seeing over there. And anything, if you can guide on what new segments you can look at beyond the consumer durables.
Yeah, so as I said, the global automotive market is a very interesting area for us because our parts are very light and easy to ship. I already ship parts to more than 22 countries, and we have a connect with all the marquee global names. So that is something that we want to drive fast. So if you look for a 3-year perspective for my business, so that's an area that I think will grow. With these technologies that we have, both in terms of the acquisition of Waterpack, we see a large opportunity in consumer businesses using the Waterpack technology that we have now acquired. So we need to grow the Waterpack business both in India and globally. So that's again with a strong runway for growth. The third area that we see is the technologies like medical devices, which has been on our radar. So we've started work with a few companies. We now need to scale that up and take them to the global majors. So that's a new category of product that we will work on. But then, with the portfolio of technologies that we have now with us and our capability for doing ab initio design and styling, partnering with OEMs, so I think that could be another growth driver in the future. So largely, growth will come from four-wheelers, as I said, in the next 2 to 3 years. Exports will grow to be a larger part of our turnover. So today, 7.5% of my consolidated revenue is exports. My target is to go to almost about 14-15% in the next 3 years. So that is an area that is very exciting for us, and that's what we want to continue to drive.
Yeah, that's really happening to know, sir. Congratulations.
Thank you very much. The next question is from the line of Amit Hiranandani from SMIFS Limited. Please go ahead.
Yeah. Sir, how is the export situation progressing? And have we begun executing orders for the exotic export orders to the Whirlpool customer?
Yeah, we've started supplies of chrome-plated parts to Whirlpool. That's one part of your answer question. What was the other question, Amit?
In general, the export situation.
In general, exports is coming back for us. So this quarter, our export revenue on a YOY basis for this quarter grew by about 13%. And overall, we are quite bullish on exports, as I said. But most of these export businesses, there's a lead time from you get awarded to that converting into sale. So I think a big impact will be felt from next year onwards.
So the double-digit growth will continue in exports, right, for FY25?
Yeah, barring some unforeseen circumstances in the global economic scenario. So people are very closely watching what's happening in the US, what's happening in what will happen to this war that's ongoing between in the Middle East. So there are some issues, but overall, the body language of the customers that we see is that they are now it's more of business as usual, and they are looking at launching new models, which is an opportunity for us to get into new exports, because typically a customer tends to onboard a new supplier based on the new programs that they run. In some cases, if they have a great problem with the incumbent supplier, they may resource it. But largely, the growth is driven by new products and volumes, which, from award to start, takes about 6 months to 9 months, depending on the specific program and the customer.
All right. So my second question is basically on the cover glass products, so the revenue potential for this over the next 3 years. And secondly, the debt status presently and the likely we are going to repay it completely or not?
The cover glass, of course, as I said, one day all cars in India will have a large display or a digital display. So that is changing across customers. So even Maruti Suzuki, which was typically focused on a low-cost vehicle, is now moving in that direction. So I think it is basically driven by the end consumer. They would like to have a display, they would like to have a rear view camera, infotainment, all bundled together in a large display scheme. It requires a TFT and a cover glass. So I think we are in the absolute right spot. How large the market will be is still to be assessed. But one could imagine that it will start with the high-end cars first, where Mahindra was the first with the XUV 700, then Kia, Hyundai followed with their models. And now I think almost all the customers are asked by the end consumer to introduce large and large displays. So the pace of growth of this business will depend largely on the or the vehicle configurations that the OEMs have. So the average price, prices vary from the size of the display that you have. So typically a large display to a small display the price point could be from 500 to 5,000 rupees. So that's the broad range that you have. And maybe 5% of the cars will start using it, and then 10 and 15 and 20. So it's a long-term game. but it's a lasting technology that will be there for many years. And so it's hard to put a number today because this is dependent most on how much, what does the OEM do. So at the moment, largely they are imported. People are setting up capacities in-house to do the local bonding. They get the TFT screen and bicover glass. So localization efforts are on. And depending on the pace of localization that these OEMs demand, I think that will determine the size of the market and how soon does it ramp up to be very significant. Of course, the government policies of Make in India help because we expect greater and greater tariff restrictions for fully imported, fully built displays, and that is the reason why OEMs are driven or the vehicle manufacturers are driven to localize this in India, which is good business for us.
And so we'll be supplying this as a tier 2, right? The tier 2 supplier, because our largest client...
It will be a part, yeah, it will be a tier 2. Many times the OEM oversees this because this is a critical part. But yes, it will be a tier 2 supply. We will supply to the instrument cluster manufacturers who will integrate this and make integrated display.
And Amit, I'll take your debt questions. The total debt for the quarter one end is 533 million. During this quarter, we have repaid 150 million to the banker, and we have taken the loan for the acquisition of Voltpack, and there is a moratorium for a period of 1 year, so that is going to be over now in quarter two. So you will see that the reduction of this term loan of acquisition in this quarter two. So net debt, total debt is 533 for the quarter end, and we have a cash and cash equivalent is 767 million rupees. So our as on 30th June, our cash position is the net cash position of 234 million.
So that is what we guided the market to also. We generate a large amount of free cash, so the debt that we took for the Voltpack acquisition largely will be repaid in this quarter. So that's what we are on target.
Great, sir. Great. All the best, sir. All the best. Thank you.
Yeah, thank you.
Thank you very much. The next question is from the line of Kaushik from AK Investment. Please go ahead.
Thanks for the opportunity. Great set of numbers, sir. My question is related to guidance part. So if I see the current run rate, you are clocking, suppose 750 to 800 odd crores of revenue. So next year, can we cross 1,000 crores of revenue? That is my first question. And based on the capacity also, how you are building the company for next 3 to 5 years? What is the vision do you have for this company, and how the mix would be changing? Because I see you have onboarded Dixon as a customer, right? So how the mix would be, suppose let's say 3 to 5 years, how do you want the mix should be? It should be consumer heavy or it will be passenger heavy? What are your thoughts, sir?
So let me answer the last part of your question first. So the future seems extremely optimistic or bright. We are marching to that tune and creating capacities across all our businesses to cater to this increased demand. So we see very strong growth. Coming back to where will we be in terms of numbers, so I would not like to give a guidance. I would say we will see a very strong growth, again, growing at close to 1.5 times the industry growth rate. The opportunities or the segment, so we've focused strategically on de-risking our business so that over-dependence on any one segment reduces. So we've done exceedingly well on this front. So FY19, 70% of my revenues came from two-wheelers. Today, two-wheelers is down to about 32% of my business. So we are predominantly have pivoted to become a four-wheeler supplier for the simple reason that we saw that the large opportunity outside India is primarily four-wheelers. India and maybe the ASEAN region are the only two regions outside China where two-wheelers have a meaningful play, and there's a limited content that you can offer to a two-wheeler. So I think we are absolutely right. The consumer businesses, I would certainly like to grow. My medical device business, I would like to grow. So I would imagine that maybe 25% consumer, close to about 30% two-wheeler, and the rest could come from four-wheelers And exports, as I said, my target is to be at 15% of export revenues on a consolidated basis in the next 3 years. So that is the outlook of what I see. Our vision for the company is very simple. So we've created a skill set in the organization where we are truly an end-to-end design to delivery company. We have our own styling studio. We have factories within factories handling these multiple technologies. So there is no stress on growth for any one segment. All these are centers of excellence. So I think we are very well structured, well positioned, and we are expanding capacity. And there is no reason why we should not be one of the predominant aesthetic suppliers in the world. The ambition really is to grow the export market, and I think we should be able to crack that. So I'm optimistic.
Great, sir. Thank you. And any company do you aspire to become in this aesthetic market? That is my question. And based on the
interrupt, sir. May we request that you return to the question queue for follow-up questions, as there are several participants waiting for their turn.
Yeah. I just a follow-up this one. This is second question.
Can you just... Hello, sir?
Hello.
Yeah. Thank you.
Hello, sir.
Yes, please.
Yeah. So any company that you wish to aspire to become in this aesthetic segment, that is my question. And based on the assets, how much turnover can we make based on the current capacity? These are my last questions, sir. Thank you.
So two things. There is no role model that we have. We want to be a role model. That is our target. There is no company which does everything that I do. I've stated that. And now if we get that global scale, I think we will be a company that other people want to aspire to be, not the other way around. So that's the vision part of the question. And what else was the question?
Capacity. Based on the assets, how much turnover can you make? I mean, how much based on the current capacity?
On capacity front, our SJS, we are currently have around 65%. So you can work out what is the number we can achieve. Exotech, we almost achieved. It's running 95%, and that is how we are planning to have expanding and putting more capex and then expand. So we are going to add more capacity up there. Voltapack is somewhere 75% kind of a current running at this level. So there is ample amount or ample growth we could able to do. We have ample lands available, and it's more of a construction and adding more machinery. So there is a good amount of capacity available in the company.
Okay. Thank you, sir. Wish you all the best.
Thank you.
Thank you.
Thank you very much, Mr. Kaushik. The next question is from the line of Prateek Vijani from Union Asset Management Company. Please go ahead.
Yes, sir. Can you elaborate a little bit further on this Dixon opportunity?
Prateek, can you be a little louder?
Am I audible?
Yeah, now it's better.
Yes, sir. Can you elaborate a little further on this Dixon opportunity, considering that you have not been a part of the telecom space and even on the consumer side, you are yet to fully ramp up on the IML, IMD parts which you acquired with the WPI. So what is the technology which you are trying to foray into with Dixon?
So we have multiple technologies, as you are aware. So we are at the moment two business segments of Dixon is what we have one businesses with. One is the telecom segment, and this is the technologies are similar to the products that we already have. So we make a lot of logos, we make a lot of overlays, we make a lot of other aesthetic parts. So these are these parts that we will supply to them. We've also won businesses, targeting businesses with their consumer appliance segments. So they are large contract manufacturers for some companies, and it is a traditional line of business that we have. So for refrigerators and washing machines, we have a whole set of products that we offer, and that is what we'll be offering to Dixon as well. This is just starting, so I think start of a journey or relationship with Dixon. We hope to grow this business along with them.
Okay, so sir, just to clarify, this would be the new generation products which you highlight in your PPT.
No, new generation products, yeah, it could be partly new generation, old generation, so business is business, right? So our business for new generation products was mostly in terms of the IML, IMD technologies that we have, and we have the cover glass and the INE technologies. So those potential